Hello and welcome to today's video. In this video we'll be looking back at how my stocks and shares portfolio performed over the month of March. In last month's video I was celebrating my first 1,000 views. Thanks to you lovely lot, that number's doubled in the last month, so thank you all so much for your support. I'd like to welcome along as well all my new subscribers, and if you haven't so far then please subscribe for future content. Thank you. I feel in my most recent updates there's been a lot of focus on bad news. I thought I'd try and end that trend this month and focus on some of the more positive things that are going on in the world right now. Right, with that out of the way, the news that dominated most of March was the continued invasion of Ukraine by Russia and the worldwide response to that invasion. The potential threat of the war going nuclear, retailers being forced into closing their Russian arms of their businesses or facing the risk of boycotts from the West, and then the longer term knock-on effects of this war. Shortage of supplies, supply routes and labour, and then the darker side, individuals capitalising on the population's needs to hurriedly find new sources for materials and commodities. The whole market is still looking as unpredictable as ever. This is on top of inflation rising, COVID cases rising, a massive energy crisis and the world economy looking like it's hanging on by a single thread. With all this going on, it's led to investors seeking the usual safe bets in times like these: gold and oil. These were both solid bets until recently, but with the US announcing the release of some of its oil reserves, we've seen oil prices start to stabilise a bit. It does beg the question though, which plagued me all the way through the pandemic: how much longer can we live the way we have been with the global resources we have? Any threat of the shortage of either food, fuel or water highlights the fragility of even the strongest economies. It's one of the reasons I'll try and invest more ethically in the future, because currently I think the world is geared to see profit above anything else, and that's not something I agree with. March was the first time in a long time that I've not invested any new cash into funds. I've talked a bit recently about starting to invest in shares rather than funds. I made a video recently about 2 shares I currently had my eye on. I'll leave a link down below in case you haven't seen it. One of those shares looked a lot less appealing a day after I released the video though, due to issues within the company. There are several others I'm still interested in though, and I think this is the route I'll start to go down with this ISA. I probably will still invest cash into funds, but one of the main reasons for starting this channel was to make me believe myself a bit more. So what I'm contemplating at the minute is starting to put new money into shares and seeing how my picks compare to managed funds I'm already invested in. With Hargreaves Lansdown's fairly high dealing charge though, it doesn't make sense to me to buy these in the same way I buy funds, as over the year I'll be looking at nearly £150 just being spaffed up the wall on dealing charges alone. The benefits of course though is the capital being shielded from tax due to it being in an ISA. It will take a long time to see these benefits, but I'm here for the long term, so to me this is beneficial. So with that being said, let's take a look at my portfolio. March saw a big reduction in loyalty bonus payments, but looking back over previous years, March and April tend to see lower payments, with some of my funds not paying on these months at all. This is a bit frustrating as I do look forward to reaching the £10 auto reinvestment, but I'm halfway towards the next one now, so it won't be long until I reach it again. Last month saw my funds get slapped harder than Chris Rock, so let's see how they fared this month. As you can see, they've nearly all bounced back this month, and I'm back to seeing decent returns again, all with the exception of my emerging markets fund, which has seen some recovery this month, but has still been absolutely decimated. I think this is going to take some time to recover, and the worst may still be to come. The fund is heavily weighted towards China, and that could be a real issue. With the Evergrande crisis still ongoing, strict COVID lockdowns and supply issues hampering manufacturing, the economy is stalling. Some have said that is the reason they haven't supported their old friend Russia recently. Sanctions could well have been the final nail in their coffin. My most recent purchase from Peerford has seen a small recovery too, but not as extreme as the others, but that's my thinking with this. The highs may not be as high, but the lows shouldn't be as low either. With such turbulent times, I just didn't want to be catching a falling knife and wanted to put my money somewhere a little safer until things settle. One thing I don't want is a portfolio full of funds with small amounts in each, so I may well have another streamlining purge soon. The big winner this last month was the Fidelity Allocator World, which saw a major uplift. This was closely followed by the Fidelity Global Focus Fund. These two have performed really well for me over the long term, and always seem to bounce back the quickest. Although both funds are on the riskier side, they've both been reliable performers for me so far. I'll just rattle through the remaining funds in more detail quickly now. I won't spend too much time on these, but you can always pause if you want to take a more detailed look. That's it for today. Stay safe out there, and thank you for watching, and I'll see you next time.